Welcome back. We are now calling it on this channel the top of the market is in. Standard Chartered, one major financial firm, is issuing a warning to Bitcoin treasury companies as we are now in the middle of 2025 and we're starting to see the volatility of the price action in the markets starting to ramp up. As you guys know, the 12 to 18 month time period after the Bitcoin halving is historically when we see the most movement and volatility in the market. And so we are in, when I'm recording this video, month 13 and 14 of this whole Bitcoin halving cycle. And I believe that we are at the top of the market. And in today's video, probably one of the most important videos we've done this year, we're going to be breaking down specifically, look over here, don't look over here. The liquidations are underway. The collapses are going to be coming and the market is going to be shocked at what is coming. Don't forget to give this video a free thumbs up. We upload every single day on this channel to bring you the latest happening in the financial world, so make sure you're subscribed. Give the video a thumbs up, and if you want to help support the channel financially, click the join button down below to learn how you can become a channel member. Thanks to all of our new channel members who are supporting and showing your love right here on the Cryptoviser podcast, because we are probably the only, if not one of the only, crypto YouTube channels here that are giving you the most up-to-date information. And guys, in my view, we are at the top. And internet computer protocol is going to be taken over. We're going to be getting into all of this. I'm going to show you all the data and all of the signals of where we are. So let's get right into it. And we're going to be starting right here with James Wynn, who has been liquidated of $100 million in bets on the crypto market. Now, I want you guys to keep in mind, if you look at my channel over the last month or so, in the middle of 2025, what you can see is that I have been consistently telling my viewers that we are towards the top of the market. We are towards the end of the cycle. And whether you believe we're at the tippy top or we're going to be going a little bit higher, there has been a lot of pressure to get above the $110,000 level. That is the all-time record high when I'm recording this video. By the time you're watching it, obviously the price may be different and we may be higher, and you're going to say, Cryptoviser, clearly we went higher, you were wrong. But I'm talking about the macro. I'm talking about whether we're at 105,000 or 115,000. To me, there's no real difference, right? Because we're at the top point of the market. And so there's going to be a lot of people who will say, well, Cryptoviser, you recorded this at 105,000, but now we're at 120,000 or we're at 117,000, so you were wrong. If that's the way that you look at macro investing, this is probably not the right channel for you. But the rest of you, you guys get it. And so if you've been following on X, this guy, James Wynn, who is a multimillionaire crypto trader, he opened up several levered Bitcoin positions for nearly $100 million just after being liquidated from another $100 million trade. Now, this article is a few days before I'm recording this video. And so basically now James Wynn is in basically about a negative $20 million portfolio. That's how much he lost by doing these levered plays on crypto. But while everybody's focused on James Wynn and he's trying to gather support, I was like, no, something's not right here. Something is not right here at all. And why though? What am I talking about? Well, guys, going back into my whole thesis about we're at the top of the market, I'm looking for signals that we are potentially at the top of the market, potentially distractions from when we're at the top of the market. And this seems to be it. Look at what he wrote on X. He said, it would be okay if it wasn't so obvious. Who controls these markets? Billions of inflows, yet the price is declining. Open up a long position, straight away hunted and targeted to my liquidation level every time you've been exposed. And essentially what he's saying is every time he opened these levered positions, by the way, publicly on X, and everybody saw it, there would be immense selling pressure in the market, which would bring the price of Bitcoin down to his liquidation level, and he would be liquidated. He would lose everything. And so he's saying that there's people hunting these trades to liquidate him on purpose. But in my view, the fact that he would keep doing this, right, $100 million levered plays over and over and continue to post this on X, I was like, no, something else is going on here. And that's what I think is actually happening. Because when you look at the actual markets, guys, I know $100 million sounds like a lot, right? And it is. But a lot of these traders who are playing these $100 million plays, they're doing this regularly. And so if you think about it, if they hold a lot of Bitcoin and they want there to be exit liquidity, because that's where we are in the cycle. At the end of the cycle, it's all about exit liquidity. Now, we're going to be talking a little bit more about exit liquidity towards the end of this video. But I have been saying to you guys, everything that I'm seeing on X, everything that I'm seeing on social media, on YouTube is like, but Cryptoviser retail isn't here yet. So retail is going to push the price to $200,000. And I'm sitting there like, wait, hold on a second. You mean to tell me that these Bitcoin companies are buying billions and billions and billions and billions of dollars of Bitcoin, and the price barely moves, right, from this $90,000 to $100,000 range, and you think that retail, all of us poor people who don't even living paycheck to paycheck, right, don't have a retirement, we're just going to come in and buy Dogecoin and Shiba Inu coin and Sui coin and Bitcoin, and we're going to be able to push the price past what Wall Street pushed it to? No. I do think that a lot of people are anticipating similar sentiment from previous cycles. But remember, the cycle in front of us is not the cycle that you want. It's the cycle that's in front of us. The market that we're trading is not the market that we necessarily want. It's the market that's in front of us. So think about it. If you are a very big whale or a group of whales, and you guys have to liquidate, let's say you want to sell $1 billion worth of Bitcoin, which is 5x from what you purchased it at, right? Because Bitcoin effectively 6x'd from the $20,000 or around the $20,000 low. So let's say they bought it $20,000 or even $50,000, doesn't matter. Once you get to the price that you want to sell at, you have to have the liquidity in the market to actually sell. And so what I've been saying on this channel is all of Wall Street that's purchasing Bitcoin, they are the exit liquidity. Now, there's obviously other stuff going on behind the scenes, and we're going to be getting to that a little bit further in the video, because I'm not actually sure that these Bitcoin treasury companies that say they're buying Bitcoin are actually buying Bitcoin. They're doing other things. They are getting the Bitcoin, but they're not like going on the open market and buying it, which would cause the price to go up if the supply is limited. These are private placements of the Bitcoin. And so everybody's like, oh yeah, they're buying all this Bitcoin. This is great for Bitcoin. It's like, not really. They're just moving Bitcoin from one company to another company and saying, well, we bought Bitcoin. It's like, technically, yes, you did, but not on the open market. That's not a supply-demand kind of situation. And that's not going to affect the price of the markets. And so a lot of people don't get this. And so if you are part of a group of billionaires and they want to liquidate their Bitcoin and they start selling some on the open market, and maybe they see that there's not a lot of liquidity because all of these Bitcoin strategy purchases are happening off chain. They're happening in private sales. And so you don't actually get to see that. So that's not technically exit liquidity. You have to understand, for you to exit the market in profit, you have to sell your coins to somebody or something. And so in my view, this is one of those situations. Look over here, everybody focus on James Wynn getting liquidated. Because then we can do like a GameStop type of thing, or Wall Street bets, where everybody goes and buys Bitcoin to help him not get liquidated. Now, why would I want to do that? I don't care what happens with his portfolio. That's not my portfolio. Obviously, I don't want to see anybody get liquidated, but I don't think this is what it seems to be. And I actually think that this liquidation was being done on purpose, right? Think about it. They have, let's say, $5 billion they want to liquidate, or even $1 billion, and they can't just do it on the open market. So they open these short positions they open up long positions on the crypto, and then they go into the market and they sell their coins. So everybody's focusing over here and not realizing that the reason he is getting liquidated is because there's selling pressure on the market. That's how you get the price to come down, and you go to his liquidation level, and then he gets liquidated. So to me, when I'm seeing him continually get liquidated constantly, a lot of people in the market, they get their emotions involved. They're like, oh, screw this. This is the suits trying to take over. It's like, no. Guys, this is not the suits. I do not believe this is the suits, because the suits are focused on these Bitcoin treasury companies. In my view, this is millionaires, billionaires, and smart money selling into this final pump. Now listen, we could go higher, But this $250,000 price level, I don't think it's going to happen because there's no liquidity on the market. Go on Coinbase, go on Binance, and look at their order book. Very, very thin, very, very thinly traded. And so when I look at the thinly traded books, and then I look at all these Bitcoin strategy companies, and then I look at James Wynn, and I'm like, none of this is adding up. Like, none of it is adding up. The Bitcoin treasury companies are buying all this Bitcoin, the price isn't moving. James Wynn keeps getting liquidated for $100 million. Like, if you got liquidated $100 million, would you go and do it again? Like, within a week of the previous time and do it on X so everybody can see what your liquidation level is so that you can get liquidated that easily? Why would you do that? In my view, it's a look over here, focus on James Wynn. Don't focus on the selling that's going on in the market because it's not Wall Street. This is just smart money selling the top of the market. That's what I think is going on. And it goes in line with my thesis. Now, I could be wrong on this, but I'd rather be protective of the portfolio than try to be right. Because at the end of the day, it's not about being right, it's about making money in this environment, right? And so we're going to be coming back to a lot of this James Wynn stuff in a minute, because this was the primer for what we're going to be talking about a little bit later in this video. Now, the other thing that I want to bring to your attention, and I showed this on a recent video, is what Saifedean Ammous has said on a recent podcast with Natalie on Coin Stories podcast. Now, I want you guys to listen to what he's saying, and especially if you've been watching my videos all year in 2025, or at least, for a few months, I want you to write in the comments whether, like Cryptoviser, he's saying exactly what you've been saying, or Cryptoviser, this is all new to me. Because to me, everything that we've been talking about on this channel, all my videos in 2025 that are talking about where we are in the cycle and how I don't think that we're going to have an extended cycle and how I think that the cycle is actually ending a lot earlier than most people think. This is what one of the longtime Bitcoin experts has said. Now, we're going to watch what he says. Then we're going to move to Internet Computer because I want you guys to understand what Internet Computer is doing and how, yes, the general crypto markets are going to follow the crypto cycle. But there could be technology that is going to outpace and be able to withstand a potential pullback in the market based on the cycle when the technology is really there. Then we're going to be talking about this warning, because really this is the beginning part of this video is prepping everybody for where we are in the cycle and then understanding what the big Wall Street firms are saying. And by the way, big money, they follow what these firms are saying. They're doing what we're doing. They're researching and analyzing this market the same that we are. That's why it is critical you guys are subscribed to this channel. Make sure you guys hit that subscribe button down below. Also, do me a favor while you're down there, give the video a thumbs up. Let me know you guys show your love down below in the comments as well. And don't forget, you can become a channel member by clicking the join button down below. But other than that, if you want to help support financially, at least give the video a free thumbs up. Let's listen to Saifedean Ammous and what he says at this, I think this was at at the Bitcoin conference, but either way, it was very recent in the middle of 2025. Let's listen in.
I just hope my message out there to everybody who's into this business is Bitcoin has done -70 and -80% before, and it can do it again. If your business model can't handle a -80% Bitcoin drawdown, rework your business model right now.
And by the way, to be clear, this is not just talking about big corporations. It's talking about you as well. Because if you're an investor, your business model is your investment thesis and strategy. And I talk about this all the time. A lot of other channels don't talk about this enough. The fact that you need to have a thesis and a strategy, and you need to stick with your thesis and strategy. It doesn't mean you can't change. Obviously, on this channel, we change our thesis regularly, but we're doing it over the course of time, transitioning into our new thesis or this new thought process about where the markets are going. At the beginning of this year, I didn't necessarily think that we were close to the top of the market, but the further we went, the closer we are, and the more indicators I'm seeing. Let's listen to what he says.
Because I think we're getting toward the very shaky ground of the top and the fall from it. Historically,
you think we're near a top?
I think so. I mean, historically, this is usually the time when we get the top, between 1 year and 18 months after the halving.
She seems shocked. And by the way, Natalie has been in the crypto space for quite a while. very well versed on Bitcoin, but I want you to understand, like, her reaction to this seems to me the same way that most people who don't watch my videos on a regular basis and come to the channel and then they write in the comments, Cryptoviser, you're wrong. We're not at the top. We're going extended cycle. Raoul Pal said that. No. And I'm like, you're a tourist on this channel. You're not understanding the whole scope of the thesis that what we're talking about. This is not stuff that I'm just coming up with out of my ass, right? I am researching every day. You guys see the videos. I post 1 or 2 videos a day, right? Probably one of the hardest working YouTubers out here. I think that deserves a thumbs up. But anyway, I post all these videos and I'm doing extensive research off the videos about where the crypto markets are, what the sentiment is, the fear and greed index, how people, because at the end of the day, people can feel so bullish and they're never, like, people post every day on X, Michael Saylor is so bullish on crypto. He said this and he said this. And I'm like, he's never not going to be bullish on Bitcoin going forward, period. And so we could be at the depths of the bear market. We could have collapses across the board. You could be completely poor, living on the street, cooking food out of a trash can with fire in it. And he'll still say, no, we are extremely bullish on Bitcoin. Bitcoin is the best asset in the world. You have to separate yourself from all of the other noise and nonsense going on in the markets and really zero in on your portfolio, what your goals are, where you want to be, and understand that the market doesn't care what you want. The market is going to do what the market's going to do. It doesn't care what Michael Saylor says. Michael Saylor keeps buying billions and billions and billions of dollars of Bitcoin, and he says, no, we're not worried about the bear market. I am. I am. Are you? Anyway, let's continue listening in.
But
Historically,
we're actually underperforming the last halving cycles.
What? Guys, every time I watch this video, I freak out because I'm like, she says we're underperforming previous cycles. Yes. Last cycle, we underperformed the cycle before that. The cycle before that, we underperformed the cycle before that. Every cycle moving forward, we're going to have diminishing returns as I view it. I think this is the reason stock markets, they go up 3% and people are like, oh my God, we're in a full bull market. And it's like, the stock went up 3%. Crypto moves 40% in a day and we don't even blink. But that volatility is coming down. And why is the volatility coming down? Because the Bitcoin is being placed in pretty secure locations that it's not going to be sold for quite a while. We're going to be coming back to that a little bit later in the video, but let's continue listening in.
It's like we should be up higher in terms of the price.
well,
so-
yeah,
Should
if
be.
you measure from the time of the halving, but the difference is that usually the bull market would have started just before the halving, but now we had a significant bull market well before the halving. So that's why it looks like we're underperforming since the halving.
Correct.
But, since the bottom, we were up from, 15K to 109. That's not inconsiderable. 110, I think we hit is the highest, or 111, I
I
think.
think 112. Yeah.
112,
Oh,
yeah, I think
wow.
112 was the highest.
But notice, like, they're focused on like, oh, it's not 110, it was 112. Who gives a shit whether it's 110 or 120? I mean, think about it. Really, really think about it. If you have one Bitcoin and we go up $2,000, you're gonna be like, wow, we went up 2,000. Okay, but you already went up from 20,000 to 110,000, like tens of thousands of dollars. And now you're worried about a couple $1,000s extra. That is the greed. And when you get to this point in the market where you're like, I am not selling my coin at 104,000. I may sell at 106,000, but definitely not 104,000. It's like you're missing the point. Because that greed will usually, at least, turn out to be the downfall of your portfolio, because then you'll get to 106,000 and you're saying, let's move it to 110. I'm not going to sell until 110. Then we may hit 110. Then you're saying, nah, I'll just wait till 115. And then you don't sell anything, and then you're in the red. So I'd rather get out at 104,000 than hope for 106,000 and then get out at 80,000, right? That's just an example. And so this whole shoulda, woulda, coulda, listen to what he is saying. Where we are in the cycle, what previous cycles meant, it doesn't matter. Because we are in a new age of crypto. And not only crypto, but the markets of crypto and the technology of crypto. As we've covered extensively on this channel, internet computer is, I think, taking over. And I think that we're going to see at some point, maybe during the bear market, maybe during the next cycle, hopefully sooner than later, because I think that forget about the price perspective, but from a technology perspective, Internet Computer is doing what no other crypto is doing. While a lot of focus on other blockchain ecosystems is on, meme coins or meme coin platforms or dexes or leverage or whatever, Internet Computer, through all that they've been through, which has been a lot. I mean, they launched into price manipulation from FTX and Alameda, and the price of Internet Computer crashed from $800 down to $2. And a lot of that was manipulation. And over the last 4 years, what they've been doing is just building, and building. And now we just saw their live AI implementation called Caffeine AI, triggering a landmark day for the World Computer Summit. And Dfinity's founder and chief scientist, Dominic Williams, did a full presentation on how this AI is implemented on chain. And we've seen this cycle very, very little from most of these cryptos. And this is another indicator because I've theorized on this channel before, most of these major projects in the top 100, they wait until an uptrend in the market to start releasing products. And the issue with that is this cycle, we haven't really seen this kind of uptrending market as many people anticipated, right? Again, the market is the market. We can't say the market didn't do what it was supposed to do because the market doesn't have there's no set path for the markets. But in our view, well, in the previous cycle, these altcoins did 100x, so they have to do 100x this time. Well, where's the technology? Where's the products? Where's the usage, right? We saw Solana, all they've created after the FTX collapse. They had a great opportunity to build real products on chain, and they didn't. They just built meme coin, fiasco nonsense. That's all they've created. And so, you have the Solana community saying, Solana's going to pump again to all-time record highs. It's like, no, it already did. It already did. And yeah, you could wait for another all-time high. Maybe we'll do it this cycle. Maybe it won't happen. But when we look at the market and we look at what the market is doing versus what it is, I mean, none of these projects have really done anything revolutionary this cycle. XRP, yeah, they created their own stablecoin. That was somewhat pretty decent, right? I'm not saying they didn't do anything, but very little. Circle, we're going to be talking about Circle in a little bit because this is a top indicator as well. But Internet Computer has done it, right? They have AI and web development platform that users can literally just talk to the AI to write their own applications, programs, websites, interactive tools for their websites. The AI is going to be able to do all of this for you, and this is the first implementation on chain. And so this is where I'm saying AI, Internet Computer is going to take over because we are going to have another AI narrative in the mainstream. And Internet Computer is really the only project out here this cycle that has really developed a tool that is in line with where the regular markets are going outside of crypto, that can transition, Web 2 into Web 3, on-chain to off-chain, off-chain to on-chain. And they're doing things very, very differently. And so Dominic posted a follow-up, and I'm going to be doing a separate video on this as well, but I want you guys to really understand what is going on here. During his Caffeine AI demonstration of this new product called Caffeine AI, there was some issues with his laptop, and while that was getting fixed, he spoke with the audience. He said to level set in preparation for the AI demo and make sure the audience understood what they were about to see. I asked the audience about their understanding of the phrase on-chain and what it meant for an app or service to build on a blockchain. He said he asked the audience to put their hands up for one of the two choices. One is true and one is false. The first choice is 1, if an app or service is said to be built on blockchain XYZ and is said to be running on chain, this means that XYZ is functioning as a decentralized cloud, and that's where the app and service is actually hosted and runs. Choice 2 is the phrase on chain means that the app or service is built on one of big tech's cloud services or similar, where the user experience and backend data and computation lives under the full control of the developers and the cloud service without blockchain resilience and security, and is termed on-chain because it has an associated token on blockchain XYZ. He said more than 90% of the audience raised their hands for choice 1, but of course, choice 2 is what the prevailing Web3 vernacular means. He said, I shouldn't have been surprised since past research performed by Dfinity found that an even higher proportion of retail crypto investors, institutional investors, crypto journalists, mainstream journalists believe that when someone said an app or service is built on blockchain XYZ and is on-chain, that it is running from XYZ, which is playing the role of a decentralized cloud. But he said, I thought the truth would have percolated more by now. This was something that he's been fighting for 4 years. This is the difference between what most other chains are doing and what Internet Computer is doing. Internet Computer is not, like, it's doing everything from the decentralized provider, right? A lot of these crypto projects, remember, the proof of stake projects, a lot of them run on Amazon Web Services. So there may be a decentralized validation of the network, meaning there's no like one company that controls all of the staking and the processing of the network. But at the end of the day, if it's all run on Amazon Cloud, Amazon Web Service, well, the blockchain is not really decentralized because it's running on a centralized server. With Internet Computer, it's very different because Internet Computer, the network, is the cloud, is where the computation takes place. This is the first of its kind. And nobody's talking about this. It's really fascinating to me. Nobody is talking about this. I don't mean nobody, but very few people are talking about this. Very few people understand the implications of this. And why? Why do you think that is? In my view, it's because we are close to the top of the market or at the top of the market, especially for altcoins. Everybody's bags are full on Solana. Everybody's bags are full on Ethereum, XRP, Cardano, Avalanche, Sui. And nobody wants to move to other chains because they're waiting for the pump. But what if the pump doesn't come? What if the pump already came in the market? And so we have to go back to fundamentals because the fundamentals are what's going to matter in a bear market. And a lot of these coins that have no fundamentals, that do nothing, that have no users, that have no growth, that have no product, that have no capabilities, no technology, no revolutionary breakthrough, technology. Well, these projects cannot outpace a project like Internet Computer that has real capabilities that they've proven on chain, regardless of where the price of the coin is. This is the difference. And this is where we need to start focusing, in my view, the portfolios for the bear market, also entry points for the bear market. Because there's some projects, as I've said in previous cycles and this cycle, that will produce absolutely nothing. They just promise and promise and promise and promise and promise and never deliver. And the newer projects, they are over-promising and they do have more deliveries than some of the legacy projects. A lot of that is because when you launch, you can launch with all the technologies that are available today, but you don't know what's going to be available tomorrow. So that you have to build those in. And so that's why you see like Hyperliquid and Sui getting a lot of attention, but they don't do anything. They have no product. They have no usage. They have no actual implementation of real products. And so we need to be ahead of that because at some point there is going to be a transition where these billionaires and the smart money, they're going to be exiting these shit coins, as they say, and they're going to be entering coins with fundamentals. That is when the price will pump. The thing is, I don't think the price is going to pump for many of these coins because they don't have anything. They don't have these fundamentals. And so when the money starts draining out of these that have no fundamentals or no usage or no actual, breakthrough capabilities, like what is the difference between Sui, Cardano, Solana, and Ethereum and XRP? Which one has like the greatest app? Which one has the greatest use case? Neither of them, none of them. They all can basically do the same thing just in different ways. And so they're not revolutionary. They're not different. They're not exciting. They're not kind of in with the narratives. And there's so much competition. There is no competition for Internet Computer, like zero, besides mainstream mainstream AI. There is no other blockchain that can do even a portion of what Internet Computer has done. And we have seen the data on chain reflecting that. Core developers, larger than most ecosystems out of Ethereum. We also showed you guys the number of commits and development that's going on the platform, and the fact that Internet Computer now surpasses every other blockchain, including Solana, by at least double in terms of transaction throughput and transaction bandwidth, with over 10,000 transactions per second clocked in the last few months. And so when we are talking about the top of the market, yes, there's going to be a lot of blood in the streets when we're talking about the markets dropping, right? There's going to be a lot of people who are going to go underwater in their portfolios because they're going to be say, but Cryptoviser, we have one more pump, one more pump, one more pump, one, and they're going to keep saying one more pump until we're at the bear market bottom. I'm not making up the rules. I'm just telling you my analysis of where we are in the cycle. And so we need to look for those next big plays, where people are going to rotate these shit coins into, or their profits into. And again, going back to what we started this video as, the whole James Wynn situation, I believe, is a distraction from what is really going on. And let's kind of break that all down. So Japan's MicroStrategy or strategy MetaPlanet is going to buy 91,000 Bitcoin in the next 18 months. And so they plan to hold 100,000 Bitcoin by 2026. And everybody's all excited about this, right? Greg Kidd is going to acquire controlling interest in No Labs, which is a publicly traded company on the New York Stock Exchange, to introduce a Bitcoin strategy company. Wow. They're going to acquire a number of shares of the company's stock obtained by dividing the sum of 1,000 Bitcoin and a cash sum to retire existing debt, redeem outstanding preferred equity, and provide additional working capital. And so we're seeing all these companies moving into Bitcoin strategies and Bitcoin asset allocation, right? Davis Commodities plans to establish a Bitcoin reserve to strengthen their asset allocation. And so everybody's cheering on all these companies buying Bitcoin, right? Uber, $176 billion Uber CEO tells Bloomberg that Bitcoin is a proven store of value and that it's exploring accepting crypto payments. Bitcoin is going mainstream, higher. Guys, this is just because Uber is going to say you can use Bitcoin to pay for purchases. Number one, very few people actually do this. We know this from on-chain data. Very few people actually use Bitcoin for payments. People are just using it to hold as a store of value. And either way, all these companies buying Bitcoin, I want you guys to keep in mind, most of these companies are just doing one-shot Bitcoin purchases. Some, like Strategy, MetaPlanet, Nakamoto, they're going to be doing regular purchases. But keep in mind, they're purchasing all this Bitcoin with debt. And that is a huge risk. And that leads us to the warning. Standard Chartered has now issued a warning on the Bitcoin treasury companies. What could possibly go wrong when more than 100 public companies start hoarding Bitcoin on their balance sheet in hopes of boosting their stock prices? By the way, all-time record highs. It's not like they did this in the bear market. And I told you guys in the bear market, I said, guys, these companies are going to start buying Bitcoin and say that we're going to buy Bitcoin at the top of the market. This is exactly identical to what the Bitcoin mining companies did in the previous cycle. They were selling their Bitcoin in the bear market, hoarding it in the bull market, and then using some of the money to pre-order Bitcoin mining rigs at the top of the market in 2021. They were going to be delivered in 2022. And then when they were finally delivered, in 2022, the Bitcoin price was down. So they couldn't make as much money as they were. The machines were already old because they already had new versions. And the price of energy went up. So how many Bitcoin mining companies do we see go bankrupt or have to be restructured because of all of that craziness? And so all these companies, they're getting into Bitcoin now. And granted, most of them are going to have long-term thesis on this, but there's a very high potential that in a bear market, some of these companies will liquidate their shares. They're buying high and they're going to sell low. That's going to create a lot of concern with other companies who are potentially going to buy Bitcoin. And again, no major companies are doing this, right? Amazon's not doing it. Apple's not doing it. Microsoft's not doing it. No major companies buying Bitcoin. Even Tesla and SpaceX haven't bought any more Bitcoin since the previous cycle. And so this whole narrative about, oh, well, all these companies are buying Bitcoin. It's like, this company is like 33 cents. Let's check the math on this. It's called No Labs, okay? And by the way, The pumps that we're seeing in these companies, no labs, based on just on the fact, look at this. This stock is worth $6 million, right? The market cap is $6 million. Somebody could literally go just buy the whole company. It went from 50 cents to 82 cents just because they said, we're going to buy Bitcoin on the balance sheet. 1,000 Bitcoin. 1,000 Bitcoin is, let's see. Let's pull up the calculator. 1,000 Bitcoin, and we'll multiply it by $100,000, okay? This is $100 million. Where are they getting that money from? How much debt does this company have? They've never actually made a profit, except for, nope, never made a profit. Never actually make any revenue either. This is very, very similar to what we saw in the last cycle with Metaverse, Facebook rebranding to Metaverse. Remember that? Everyone's going to live in the Metaverse. Everyone's going to be going to work in the Metaverse. We still have nothing, guys. There's no Metaverse. I was really looking forward to going and going to the beach in the Metaverse, not the real beach, the Metaverse beach, because there's nothing like pretending to feel the nice breeze of the ocean on you, pretending to do it through an eye set, like through a headset. Anyway, you guys, I think you guys are getting it by this point, but there's more. There is more. So let's go into here. So they're talking about Michael Saylor. Standard Charter is sounding the alarm on what appears to be a mad rush to stack balance sheets with Bitcoin, which is linked to all-time highs of just under $112,000. The bank warns that if Bitcoin sheds 22% of its value relative to the firm's average Bitcoin price, or if Bitcoin dips below $90,000, half of a subset of 61 public companies currently employing a Bitcoin treasury strategy will go underwater. In other words, the market value of the company's shares will be less than the value of Bitcoin held. I mean, hello. I've been saying this for weeks now, months. The report says Bitcoin price volatility in and of itself may drive the Bitcoin price below the average purchase price of many of these treasuries. Half of these would be underwater if the price fell below $90,000, which is a 10% drop from where we are when I'm recording this video. I don't know. That doesn't sound great in my view. The report said, based on the 2022 example of Core Scientific, we estimate that prices more than 22% below average purchase prices could lead to liquidations. And they're talking about Core Scientific. Core Scientific is one of those Bitcoin mining companies that we followed in the previous bear market. A lot of people on my channel made a lot of money on that stock, even in bankruptcy, by the way, because they went bankrupt. And I told my viewers, I'm like, their hash rate is still good. Their operations are still good. And by the way, before they went bankrupt, they even were offered a bailout by their creditors. And they said, no, we want to go bankrupt, go through the bankruptcy process. And then those creditors ended up getting, I guess, a discount on bailing the company out in the bankruptcy proceedings. But by the way, the stock price went, not the stock of the current Core Scientific, because it's technically a new company when they came out of bankruptcy. But while they were in bankruptcy, the stock price went down to 5 cents. And a lot of people on my channel bought at 5 cents. And I think it went up to $1.50 after they announced that they were going to be coming out of bankruptcy. I mean, where can you make that kind of money? I mean, it's pretty unbelievable. But that is exactly what I think is going to happen with these Bitcoin strategy companies at some point. Maybe it's not going to be MicroStrategy, but maybe it's going to be some of these other companies, right? Maybe GameStop. If they go bankrupt, which I think they were on the verge of going bankrupt anyway, but if they go bankrupt, what's going to happen with those Bitcoin? Well, maybe MicroStrategy will buy it at a discount. Because you guys have to remember, it seems to me that part of the reason we're seeing all these purchases of Bitcoin and Ethereum and all of this, but we're barely seeing movement on the price. It's because these are off-chain transactions. These are private transactions that are taking place, and they don't actually show up on chain. So Arkham Intelligence said, did Consensus just buy $300 million of Ethereum? A whale linked to Consensus just acquired $320 million of Ethereum from Galaxy Digital. They transferred it to a new address where it was staked at $120 million worth of Ethereum with Liquid Collective. And so we know Consensus, Joe Lubin just created a company that's going to buy, I think it's called SharpLink. They're going to buy Ethereum. And so they're just taking the money from Consensus moving the coins to the new company, and then Consensus or whoever provided that liquidity gets shares of the new stock. So technically, there's no purchase taking place. It's just a movement of the funds from one entity to another entity, which I guess is any purchase or sale, but you're doing it on the open market in most cases. And we're not seeing that here. The other thing that we have to keep in mind is like, where's the US's Bitcoin, right? Was it sold? Was it not? I don't know. We were told that they're through an executive order, they were going to be finding out how much the government actually has, and we still don't know. Did they sell that off? And if they did, again, that's not really a purchase, just moving it. And keep in mind, 61 publicly listed companies hold over 3% of the total Bitcoin supply currently. 3% of the supply that wasn't even there a few years ago. The Bitcoin mining companies are buying Bitcoin, Strategy's buying Bitcoin, all these companies are buying Bitcoin, and the Bitcoin ETFs are buying Bitcoin. Hundreds of billions of dollars over the last 2 years. And people are still saying to this day, in the middle of 2025, but Cryptoviser, we haven't even started the bull market. When the bull market starts, I'm like, we're literally at $105,000. But it goes back to that Saifuddin Ammous interview where the interviewer says, wait, but we should be higher. Should be? The market doesn't care about should be. The market does what the market does. But everybody's been cheering on, right? MicroStrategy's buying all these Bitcoin. We don't know where they're buying it from. Michael Saylor will not provide proof of reserves, which we know, which is also very odd, because it seems to me that they probably do have the Bitcoin, right? They probably do. But from one of the interviews, I don't think it was this specific interview, but one of the interviews where they were asking him about it, he's like, I don't care if we show a top level address, like wallet address that shows how much Bitcoin we have, but I don't want to release the transfers. I don't want people to see the full history of these coins. And that makes me think, okay, well, then where are you getting the coins from, right? He's buying it from somebody, and it seems to be off chain. It doesn't seem to be like a open market operation. And so if it's not an open market operation, where are they getting the Bitcoin from? Maybe Mt. Gox, maybe some of these other companies, maybe the government, I don't know. But it's a risk to not know, right? In my view, it's just a risk. And we have to understand what these risks mean. And it's, by the way, it's not just MicroStrategy. We're also hearing, I thought I pulled it up, but Jack Mallers' company. I think I did pull it up. Yeah, it's right here at the end. Hold on. So Jack Mallers' company is doing proof of reserves, and they're also doing Bitcoin loans. And so number one, the Bitcoin loan situation is a concern because you guys know when leverage is typically what causes top of the market to occur. And they're saying there's no rehypothecation of this Bitcoin. But the question then comes, well, then how are these companies making money? They're not just loaning money out and holding your Bitcoin. And granted, they're probably thinking of long term. So even if they lose the loan over the long term, the Bitcoin will still be worth more. But that's not a strategy for lenders, right? So how are lenders actually making money on these loans? That is the question that everybody needs to ask, because they're proving that they have the Bitcoin. They're going to be posting their proof of reserves to show they actually do have the coin. And we know 21, they got a lot of money from Tether, a lot of coins directly from Tether. But how are they going to make money, right? That is the question. Again, that goes into risk. Now, this guy, David Seroy, whose ecosystems at Alpine Labs, he wrote on X that he was a private money lender. And he said, let me explain what I think is happening with Strike for Strike lending. Now, keep in mind, Strike is different than 21. 21 is a Bitcoin acquisition company, but its CEO is Jack Mallers. Jack Mallers also is the CEO of Strike, which is like a wallet provider. Strike is doing the lending. So they're saying there's no rehypothecation of the loans. They say they're working with capital partners like New York Dig to provide these Bitcoin-backed loans. But keep in mind, right, in the previous cycle, we also had pretty big players backing these loans and involved in the loans as well. But that doesn't mean that we're not going to have a blow up, or there's not going to be, let's put it this way. In the stock market, right, you have derivatives built on derivatives built on derivatives, right? You have the stock, Apple, we'll take for example. So you have the stock on Apple, then you have futures on Apple, then you have people buying call and selling calls and puts, which are derivatives. And then you have people shorting in and people lending their shares out. So on top of a stock, there's layers and layers and layers of derivatives, which is all based on the underlying asset. And this is why typically derivatives should derive their value from the underlying asset. But because these underlying assets is where people are making bets on the market, it's opposite, where the derivatives are usually indicating what the stock price is going to do. For instance, if you start seeing a lot of call options being purchased, this could be a bullish signal for the market or for that individual stock. And so he says too long didn't read is that they're securitizing the loans effectively, not rehypothecating them, right? Rehypothecating is you lend me your Bitcoin and then I take your Bitcoin and I go do something with it to make money. It's kind of like how the banks, you give them your money and then they immediately loan it out. That's rehypothecation. Securitization is different. So he says, let's say Jack or Strike lend Alice $1 million against $2 million of Bitcoin, right? So I have $2 million worth of Bitcoin. I give it to them as collateral. They give me $1 million. Alice gets $1 million in cash. In return, Strike holds the Alice IOU, a signed note saying Alice owes $1 million of interest. That Alice IOU is now an asset on Strike's books. Now, what if Strike has more demand for borrowing than they can handle and they run out of cash? They need to raise more. So there's two main options. Sell the IOU, offload Alice IOU, and get back $1 million. Many lenders do this, especially if they make their money on origination fees rather than holding to collect interest. This is where you get like debt collectors who purchased a package of debt. They were not the person that you owed the money to, but the person you owe the money to sold the debt to somebody else. Or two is you can borrow against the IOU, use the Alice IOU as collateral to raise new funds, keep the loans on the books, and still earn interest. To borrow against an IOU, the terms must allow it, which might explain why Strike changed their terms and conditions, and there was a lot of drama on that. We're not going to get into that in this video. But they still include the language pledge, not rehypothecation, pledge, in their legal documents, even though they removed the rehypothecation word. Now, Strike can pool together Alice IOU, a Bob IOU, a Carol IOU, all the loans that they have and they owe money on, and to bundle them into a Strike IOU, which is a loan portfolio. This is called securitization. Then they can walk over to someone like Ross Stevens at New York Dig, one of their partners, capital partners, and say, here's $5 million of Strike IOUs backed by $10 million in Bitcoin collateral. Will you lend us $4 million, which is an 80% loan to value ratio? Let's say New York Dig agrees. Why? Because the original loans are already 50% of what the collateral is. And he's lending 80% against that. So his exposure is only 40% of the loan to value on the original Bitcoin, which is pretty safe given how secure the loans are. New York Dig likely even offers a lower interest rate than what Strike is lending to its borrowers. So there is a nice spread there. And so this is just an example of how they could be making money. We don't know that they're doing it this way, but it could indicate that. But it still goes back to the fact that this is very new. We don't know how this is going to work out. It's never been actually tested in this kind of environment with this much money and at these record highs. I want you to remember, the title of this video is "The Top is Already In." We are already at record highs, and now these things are launching, and people are taking loans out. What do you think they're taking loans out to do? Buy more Bitcoin. And so this is the same thing that occurred in the previous cycle, over leverage. And I've been telling my viewers for years, since FTX collapsed, in the next cycle, when we start to see the over leverage, that's the indicator. And by the way, MicroStrategy purchasing all this Bitcoin is very, very high leverage. But I believe that MicroStrategy is either at the point or trying to get to the point where they become too big to fail, where they will not be allowed to fail. And they're also positioning themselves to be able to go and purchase some of these companies if they go bankrupt, right? These 61 companies that are buying Bitcoin at the top of the market. If they either have to sell their coins in the bear market, they're going to have to do it through a private placement. Because if let's say GameStop, they put $500 million on the market to sell, it could crash the price even further than it already would be in a bear market. And so they would have to do a private sale, which means they likely would sell those coins at a discount to the market price, already underwater. And who are they going to sell it to? MicroStrategy. Because MicroStrategy, if they can buy Bitcoin at a discount, they will. And so you have to remember, your portfolio is not MicroStrategy's. Your investment thesis is not MicroStrategy's. So don't follow what MicroStrategy's doing. This is the exit liquidity. All this money entering the space, this is the exit liquidity. And you may not believe me at all, right? And that's fine. But I want to remind you guys, first of all, Trump family now is suing Magic Eden or giving them a cease and desist because they're trying to launch a Trump wallet. And the Trump family is saying that they're not associated with the Trump wallet and they're using their name and likeness. This is more indicators that everything got a little bit ahead of itself and there needs to be a corrective phase. Just to show you the big money, the billionaires, the smart money, Arthur Hayes, I consider him a very smart money player in this market. He is a gambler. He is a trader in this market. And so he says, as much as I hate on Circle, it's great for all of our bags if TradFi is buying what we are selling. Yahtzee bitches. And he's talking about the Circle IPO is said to be over 25 times oversubscribed. Because again, the banks, the Wall Street firms, they want a piece of Circle. They want a piece of stable coins. They want to own it, and they're going to own it, and they're going to. And what did we see? The stock price, the IPO price was at $30. And when this coin launched, it went from $30 immediately to $90, and now we're at $110. And so this is showing $15 billion valuation, but from my analysis of their financials on the launch, it's actually about closer to $100 billion, $60 to $100 billion valuation right now. And so this is very, very frothy, right? IPO going up 4x, and it's just a stable coin, right? They do make money, but are they making this much money? Or is this just a play to get in on the market, right? And I'm typically not somebody who likes to short things in the market, but if we start to see a reversal in the crypto markets, there's going to be a lot of red on the chart for Circle. But guess what? You know, the early investors in Circle, which I'm sure Arthur Hayes was probably, they 3, 4, 5x their initial investment, their IPO price, just overnight. This is the indicator that we're at the top of the market. It may not be the market that you want. These pumps may not be happening in the altcoins. But remember what I said this cycle. We don't really have a narrative this cycle. Last cycle, it was smart contracts. Last cycle, it was interoperability. It was oracles. It was NFTs, DeFi summer. This cycle, it's all about the Bitcoin strategy companies. And in my view, the fundamentals of these altcoins, but the altcoins really haven't moved that much. And so do we want to keep waiting or do we want to take action? And in my view, the top is in, guys. Whether we go a little bit higher than this or not, I don't know that it's worth the risk because all this buying pressure, all these companies buying Bitcoin and putting it on their balance sheet, Bitcoin ETFs, hedge funds, everybody's talking about Bitcoin. And meanwhile, the price cannot budge past this $110,000 level. And even if it does budge above this, let's say we get to 120, 125, 150. What's going to be the next catalyst to drive us even higher? We can get to 150, and then if people start selling, there may be no more buying liquidity. So the people selling can't sell. There's nobody to sell to at those prices. Then the price comes down, and it comes down, and comes down, and comes down. And so we need to focus on what is, not what if. And in my view, this whole James Wynn situation, I mean, he obviously lost a lot of money there, but was he also gaining on the other end? I mean, think about it. If you have to liquidate $1 billion and you say, listen, we have to take a 10% hit to actually liquidate this $1 billion. So let's put 100 million into a trade that says that we're long, and then we're going to go sell into that trade, get liquidated at the 100 million of that $100 million, but we just extracted from the market $1 billion. So $1 billion minus 100 million or even 200 million, still 800 million bucks. And again, this is just the numbers that I'm throwing on the top of my head to show you that even though it looks like he's getting liquidated, I don't think that he would be publicly playing with $100 million twice if he wasn't making money somewhere, right? And so we have to really pay attention to that. It's very similar to the likes of people saying, oh, we have an extended cycle. The cycle's not going to top until 1 year later, 1 year from now. So just keep buying these dips. And why are we dipping? Because they're selling. And who's buying those dips that they're selling into? You, because you think that we have an extended cycle. Me, I think the top is in. We will see. Let me know what you guys think down below. Give the video a free thumbs up. Hit the subscribe button. Let me know you guys enjoy this kind of content by commenting down below and check out my other videos. I'll see you when I see you. Crypto on.